Welcome back to Bitcoin Season 2. Today I've got the two co-founders of Arch Network on the show. Yes, also the sponsor of Bitcoin Season 2. I'm really excited to talk to Matt and Amine about Arch. They made a big announcement yesterday morning, raised $13 million from Pantera Capital. Let's kick it off. Okay, Matt, Amine, welcome to Bitcoin Season 2, this time as both sponsor and guest. Welcome, guys.
Thanks for having us.
It's been quite a whirlwind 24 hours, I imagine. You guys announced a $13 million raise, Series A, led by Pantera. How do you guys feel right now?
We've been preparing for this for about a month, so it's good that it's here. It's finally out of the way, so we can get back to building. Because obviously, there's some PR related things that you have to focus on and make sure that you attend to when this thing kind of drops. So we've been getting ready. We've had a little hiccups along the way, but nonetheless, we're excited that it's here. How
do you feel, Amine? You're the engineering muscle here on the team. It's been, I would say, I've watched you guys deliver stuff incrementally over the past year. How are you feeling right now?
It's been great. It's been like a big journey for the past more than a year now. It's great to see the vision start actually come into reality as we ship products and ship apps. Yeah, to Testnet and very soon to mainnet. So it's great to see some validation with the round announcement and see the excitement from the ecosystem as well.
Yeah, and we'll get into what's going on in Arch and how it works under the hood. But you mentioned that you've been working on this for over a year. I mean, I think it's been 2 years right now, pretty much since I initially heard the high level concept for Arch. I'll invite you guys to reflect on the past 2 years to date. Walk me through, briefly, just what the past couple of years has looked like as you guys have built this company, gone to Testnet, wooed developers and users to the platform. How's the process been to date so far?
It's been a wild year and a half. I think that's when officially we came together and started building actually what Arch is today. And Amine was already working on something that similar to this a little bit before that. But both of us had various checkered backgrounds in crypto and in our professional lives leading up until early 2023, when we both kind of had that same realization or that catharsis moment when we were saying, wow, this ordinal, stuff can really open up the design space in Bitcoin, and we can actually, for the first time, put arbitrary data on Bitcoin. So we really aligned on that notion. We joined the Bitcoin Startup Lab, and that's where we met. But the whole early year of the 2023 was really what paved the way for that, because I think Amine first realized from a developer perspective what was missing. And certainly from a macro, top level view, I certainly saw the opportunity from a business case perspective. So that's where we really kind of met in the middle. And then the last 2 years have just been absolutely wild. Starting with around an early part of last year, led by Multicoin, and Portal Ventures did our pre-seed round a little bit before that. They recognized, the differentiation of what we were trying to accomplish. And, I think that we just carried that same theme throughout the remaining rounds with just high conviction investors that have a lot of experience and a lot of value to add when it comes to growing an ecosystem.
Yeah, before even getting into Arch, what the notable thing is that you guys have attracted names from the crypto venture titans, and these guys have not really deployed very much money into Bitcoin for a while. What attracts them about Arch? Why is it Arch that you guys have managed to finally get them to deploy cash into Bitcoin ecosystem?
Well, when I think the Bitcoin design space really opened up, we saw an enormous amount of venture activity pouring into the layer 2 landscape. And there were, you know this probably better than I, Charlie, but more than 100 L2s or something last year. But the majority of the VCs that were participating in this was more of a buckshot scattered approach, saying I agree on this idea that DeFi and Bitcoin will exist, but no real technologically speaking thesis about how that would look. So it was kind of just a spray and pray approach across the entire ecosystem. But when we went through our due diligence process through our various rounds, we recognized and took notice of the investors, not only for their track record, which Multicoin and Pantera have a phenomenal track record, but they make very concentrated and high conviction bets. And then they follow up with those bets by backing the ecosystem or those projects in a number of different ways. So it was really, there was nobody that came close when it came to evaluating partners for the future, when it came to filling these rounds. But we're blessed to have them as partners. And I think that it's good validation or credibility in what we're trying to do, which is very different. And I think that if you're a thesis-driven investor, you have to look at the landscape and see 90 plus EVM copycat rollups with a multi-sig, and then you see one, Arch network that's actually trying to do something new and novel. If I was putting myself in their shoes, I would probably do the same thing.
It's mostly like the differentiated approach. Like earlier, like a year or so ago, like all of these, you start seeing like these VCs pop-ups like fund and like literally EVM L2 copy paste, like nothing new, mainly a multi-sig and like deploying an optimism fork and like calling it a Bitcoin L2. Some of them like are not even like they're just funneling assets to from Bitcoin. But I think most people didn't like take the time to like think about what Bitcoin needs and what is still missing from it. And like even with the ordinal boom, we still see like blocks not filling up, and you can't really like there isn't demand for scaling if the blocks are not full on a consistent basis. So we just like took the approach of like enabling L1 programmability first and filling up those blocks before we even think about like scalability.
Yeah, you already touched on multiple topics, which my dive into the Arch documentation, I'll call back to those. The Arch VM versus the EVM, the differentiated threshold signing scheme for an interesting like liveliness component to it. So before I lose the listener and start talking with Amine about like how Arch works under the hood, maybe let's talk about just the Arch ecosystem, which I think is very exciting. You've got several popular apps now, I think, which have gotten user traction. Matt, can you just talk to me about like what are people doing on Arch, and what could people do on Arch in the future?
I mean, if we're comparing to other programmable chains like Ethereum and Solana, you can do all of the same things. That's the beauty of utilizing Arch to do more Bitcoin programmability, is that you no longer have this dilemma. We call it the Bitcoin builder's dilemma, where you don't have a native VM, you don't have smart contract controlled wallets or program derived addresses on Solana in those two cases. You don't have these critical pieces of infrastructure that allow for Turing complete programmability. So we were mainly focused on, first of all, building those things, but also realizing, like Amine said, what the limitations of Bitcoin is and what it doesn't have, and just bringing an EVM copy paste or even SVM for that matter. It doesn't necessarily work with UTXO architecture. It doesn't create Bitcoin transactions, and it doesn't interoperate with Bitcoin wallets or other architecture. So from a user experience standpoint, we knew that would be a non-starter for us if we're going to be building something that's actually truly native from the user's perspective, but also performance enough to do these types of more complex and scalable applications like you see on Ethereum and Solana.
So what are, this is a question to Amine, what are some of those differentiated components? You mentioned the VM, there's signing, but you guys are kind of in-house producing a lot of different verticals for Arch. What are some of those, and how are they differentiated?
Yeah, so we have a couple of pieces to the system. First of all, we have like the Frost and Dross multi-sig. For the listeners who are not very technical, Frost is basically like a multi-sig that enables thresholded signature schemes, meaning that only a subset of people who hold the keys can participate in a signing session to produce a valid signature. And Dross is basically a communication protocol on top of Frost that basically enables the signing scheme to be more robust and have some guarantees around robustness, which is like really crucial for any distributed system. We also have the Arch VM, which is inspired by eBPF and the Solana virtual machine. The reason we picked the SVM and draw some inspirations from that is because it fits very naturally with like Bitcoin's UTXOs. Bitcoin UTXOs are processed in parallel, so you can map the accounts from the VM to each UTXO and have this like anchor in, so you can keep the state transitions that are happening on Arch and the UTXOs on Bitcoin atomic. And yeah, we also have some infrastructure to enable like real-time apps. We built in collaboration with Saturn real-time mempool indexing software that basically indexes Bitcoin transactions and meta protocols like runes, ordinals. And yeah, from within the VM, you could basically like fetch Bitcoin transactions, construct Bitcoin transactions, post Bitcoin transactions to Bitcoin from within the programs. So the multi-sig basically helps programs basically take control over assets that is delegated by users, of course. And it also plays a key role in our consensus mechanism, where you have like instant finality. Each block is basically signed by our multi-sig, and everyone can basically check that the block has been confirmed and validated by the whole network and get instant finality instead of having these like branch and forks.
And Charlie, one thing I'll like add to what Amine said about Frost on Roast is, and why it's so like innovative and novel and what we're trying to do is there's a few different companies that use Frost, right? Like I think Botanix and Stacks both use Frost, and it's certainly not our innovation by any means. How it ultimately how we use Roast to effectively decentralize that signer set over time is everyone else with a multi-sig, they essentially whitelist or hand select a signer network, aka like a guardian network. So in other proof of stake systems, the network doesn't choose the people that participate in consensus. Anybody with tokens can delegate those tokens to some validator, and anybody can be a validator. Or just like Bitcoin, anybody can participate in its consensus technically. So what Frost and Roast ultimately allows us to do is it allows us to have this multi-sig that can decentralize and scale over time in a dynamic way. People can drop in and drop out of the set. They can come into the set. People can change the amount of staking that they have in the system. So that ultimately changes the amount of weight that they have in consensus and thus the multi-sig. So nobody else in the Bitcoin design space ultimately can have a dynamic signer set that can scale over time. Where the keys of the multi-sig actually are redistributed in a dynamic way.
That actually is I want to double click on that because that's really interesting. And this is one of the big like Bitcoiner criticisms of proof of stake is that it's really hard to get around this permissioned validator problem, or at least some kind of bootstrapping validator problem. I would invite you or Amine to describe this a bit more. How does Roast accomplish this, allowing more validators to join without your, as you say, Matt, a guardian validator set?
So we have like a distributed key generation scheme at first for like the Genesis validator set, where people our Genesis validator set basically generate in a decentralized way, like random keys, and they each get a signature share in the multi-sig, and the aggregate signature is basically what controls the underlying multi-sig. So each number of epochs, we have a resharing mechanism where each validator reshares their own secret share to the new validator set, and everyone in the old validator set does that. So you end up with these new secret shares in the new validator set that render the old secret shares invalid as long as 51% of the network basically destroy their keys. And that is the assumption that we make here with Arch, and the validator set is that 51% of the network is always going to be honest. And this gives you like the ability of being flexible in the validator set. You can like change the number of validators in the new set. You can either like validators can exit the validator set, new validators can join. You can scale it up and down depending on like the circumstances.
Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid and they are racing towards mainnet. There's DEXs like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding Testnet users. So join me in trying out Arch while it's still early. So on top of this, you guys have also built your own VM. Now, I don't have a deep knowledge of how these virtual machines work, EVM. I'm just like, I read the high level stuff and I see the EVM, SVM discussions. And here we have Arch VM. How is it differentiated? I mean, first of all, did you guys build this up? Did you build this from the ground up, or did you bring in components of other virtual VMs? Like, how does this work, and what's your mindset been as you guys build this?
So we actually forked the same repo that Solana forked that we're making the SVM. It's called like eBPF. We basically constructed the VM in a way that's like, it's similar to Solana's like transactions, but it also has some Bitcoin native capabilities. So you're not going to be able to like construct Bitcoin transactions inside the SVM. You're not going to be able to like pull transactions from the Bitcoin blockchain. You're not going to be able to like request signature from validators of the network on the SVM. So we had to make some design decisions inside the VM, adding some syscalls, like changing the entry point of the VM to basically allow for this type of functionality. The main reason we chose to like start off of like eBPF and not start off of the EVM is because of like the parallel nature of like Bitcoin. As I said, Bitcoin processes UTXOs in parallel, and we need a way to express that and to make the developers aware of that in order to make Bitcoin native apps on the L1. And that is why we chose to go this way.
So one of the big, it's really funny we have this conversation today, because I think like 2 or 3 days ago, Vitalik like literally was saying something like, let's do away with EVM. And I think some of the responses were like, EVM is like the one network effect that Ethereum still has. And, but, and it's timely because, one of the challenges that you guys have is getting developers to use a new VM. Tell me how you guys are, cracking this nut, because this is a big challenge here.
Absolutely. Yeah. It's very similar to the early days of Solana in the sense that I believe they call it the chewing glass phase, right? Where a lot of developers recognize the friction on Ethereum with high gas fees and slow throughput. And ultimately what C-level and the SVM represented in terms of a better UX or a lower cost ecosystem or way of transacting. The problem is it wasn't in Solidity, it was in Rust. And there wasn't any really that much supporting documentation or open source frameworks that helped developers build. There wasn't a lot of open source, boilerplate smart contracts like you see on OpenZeppelin or something on Ethereum like that. So it took a lot of time to master that skill of building something on Solana. And if you recall, the first DEX ever on Solana, Serum, they were massively supported and incubated by FTX and some of the early contributors of the Solana ecosystem. So there's a lot of friction on the front end when it comes to developer adoption and deployment when building a new VM or a new developer ecosystem like this. Like you said, the EVM is the biggest flywheel or network effect that Ethereum has, because you probably have 300,000 developers that are Solidity qualified. And yeah, any front end builder can pretty much build a Web3 application using EVM at this point. And now AI is getting better and better. We deal with that same friction, right? We have to develop a anchor-like framework that abstracts away the complexities from the developer experience, IDL generation. All these things ultimately contribute to a better developer experience, but accelerate adoption. But what we don't have in terms of trade-offs or crosses to bear is an enormous amount of friction that these other EVM L2s do have, right? When they ask their developers to fragment the liquidity or silo it into their layer 2 and bridge, that's a much bigger point of friction that they're going to consistently have to deal with on an ongoing basis that we will not have to deal with. So once we get over this hump, as far as a developer adoption and decreasing that friction on an adoption standpoint, then we feel like we have got a great advantage.
Yeah, I mean, I feel like I imagine you probably spend a lot of face time with people building on Arch, like developers or in the weeds, your strategic partners as you go to launch. What are they saying? Like, what are you seeing as this new crop of builders and applications build stuff on Arch Network?
I'll say this first, like, definitely, like, it's definitely like a new programming paradigm, like, thinking about a single-threaded virtual machine that is the EVM is a different paradigm from like thinking about like parallelism. So it's definitely like a challenge for people to get started, but once they start, they really like start appreciating like what Arch can enable. For example, like Saturn, they were like able to provide this like L2 experience on the Bitcoin base layer without any trade-offs for like the takers of the liquidity. So they're like, so it's like the best of both worlds. It's you get the speed, you get the good user experience, and you get the safety of Bitcoin, and that is like something you can't get on these L2s. You can't get really anywhere. And I feel like once people realize that, they start seeing the vision and they start seeing like what Arch can enable. And from there, like it's mostly like smooth sailing.
So what are some lessons you guys have learned from Testnet? There were some like small hiccups, but like you guys have powered through those. You fixed and patched those. That's the purpose of a testnet. What are some kind of experiences or lessons that you guys have found during the testnet period?
There were like two main problems, just like the indexing software that's out there on Bitcoin is like really slow. So we had to like rebuild our own indexing software to deal with like how fast Arch is. And also the probabilistic consensus from Bitcoin and like all these reorgs and RBS or like are really challenging to deal with. And we came up with like fixes for like both of those. We have now the Titan indexer that indexes like real-time mempool data. Like as soon as the transaction is in the mempool, we're able to index it, very low latency. We've seen like people after we published it and open sourced it, like a lot of people just like thanked us. Like we literally cut latency for like a lot of apps in more than half just by this simple change. And also regarding the rollback, I think this is something that like most apps that are live on Bitcoin right now struggle with. When you're like almost every app on Bitcoin right now is waiting for like at least one confirmation on the base layer, and we didn't want to like we didn't want that user experience. It's really bad. You don't know if your transaction is gonna go through or not, and you have to basically keep checking it. And you can even trade the UTXOs that are unconfirmed. So what we came up with is this rollback mechanism that basically enables us to like not wait for confirmation at all and just keep like producing blocks. And if a change on Bitcoin happens, we're able to like map the state through like a transaction dependency graph. So we're basically mapping each transaction in the graph by what accounts that are similar in both transactions. So you're able to have this like DAG that shows you all the dependencies between transactions, and you can basically easily determine what is the correct state depending on like the changes that happened on Bitcoin.
Yeah, it's interesting because that was my next question, was about the like you guys choosing to put basically a DAG on Bitcoin as a way to solve for what you call, I guess, Bitcoin pre-confirmations. Yeah, just keep going down this road. Explain more about like what's happening under the hood here.
So we've seen this problem with Saturn where you basically like Arch is way faster than Bitcoin. Bitcoin has like 10-minute block times and Arch has like sub-second block times. So you have this situation where you're processing a lot of transactions. They're chained together, but sometimes the state in Bitcoin is just like wrong. Someone like RBFs a transaction or like reorg happens, and like you can't push any more transactions to Bitcoin because your state is just wrong. So the transaction dependency graph has basically allowed us to like detect those changes with the help of Titan indexer, and also change those states in real time, so we don't have to basically like wait anymore, and that we can send those transactions as fast as Arch transfers them.
So, Matt, this is really, this is interesting because you and I have been in various chats about Bitcoin MEV, and this is fun and exciting and can kind of nerve-wracking talk for a lot of people. But Arch does bring in interesting new dynamics to Bitcoin transaction ordering and liveliness and confirmations. Talk to me about how you guys think about transaction inclusion in blocks, and how you guys think about how this may change the game up for like how Bitcoin blocks are produced.
Yeah, I think when developing a system, it's very important to be looking at incentive design, right? Like it's not just all about can you do this with duct taping a few technologies together, but do the actual incentives of all participants actually line up? So one thing that Amine has been really, I would say, innovative, because you have a lot of skeptics in the Bitcoin community that just kind of accept it is working with the status quo for what it is, and say miners will just do whatever they want and they'll wreak mayhem, and you can't rely on incentive design. So I think that there are some really forward-thinking and advanced concepts that Amine has come up with that is going to play a large part in block inclusion and being able to offer a very high probability of block inclusion, especially as this market really heats up in the war for block inclusion. You got a lot of L2s that are going to be wanting to post their data back to Bitcoin. You have lots of meta protocols that are also signing Bitcoin transactions up at base layer. So being able to do this robust fee estimation and incentive mapping is really important. So maybe Amine can explain a little bit about some of these things and these concepts that we're working on. I don't know if we want to share too much about some of the.
You don't have to share everything, but I am really curious because this is one of the most interesting topics which not many people are talking about, I think.
I think like one challenge that remains on Bitcoin is that app developers don't really have a reliable way to know if a transaction is going to get included or not. We've seen like the mayhem happen on like Magic Eden, where people just like continuously snipe transactions. And we don't see this on like other ecosystems. They all have reliable like fee estimation and like block inclusion guarantees that are offered by these like economic incentives to block producers. And I think RBF is a version of that, but it's not there yet. And there are a lot of improvements that we can do in that section of Bitcoin.
Let's zoom out a bit, and I want to get your guys' thoughts on various like Bitcoin ecosystem topics. I think one is it might be a bit of a cliche topic, but I think it's interesting because you guys are trying to attract app developers. There's a great page on your website which is like, who is Arch for? Like, we want to get art, we want to get DeFi, we want to get GameFi. I thought GameFi was really interesting because this is this kind of white whale in crypto where we all feel that it should happen. And I think you even in particularly single out most notably my favorite topic, which is prediction markets. I'm very opinionated on this, that I think prediction markets are one of the most underexplored high product market fit applications. Do you guys see this happening on Arch? I mean, I know you say like everything can be on Arch, but we saw a huge success last year in prediction markets, but it was on, of all things, Polygon. What do you think is like these new types of, do you think that, that these like types of applications will take off or on Arch? Is Arch suited for these types of applications? What are your thoughts here?
Well, as far as prediction markets go, I think that they certainly did heat up last year because of this U.S. election cycle. That really, provided a path for people to speculate and do this, decentralized betting or outcome betting situation. But utilizing AMM infrastructure to do these, decentralized houseless betting protocols, I think that is a novel, thing to build with any system. So I think people will want to use their Bitcoin to make bets on sports or bets on outcomes in politics and things of that nature, just like they'll want to do in the financial market. So we do have a prediction market in our testnet right now called Predictor Market. There's a few others with a couple other exotic spins to them that are in development. But we do think that betting, SocialFi, GameFi, these types of concepts certainly have a place in Bitcoin.
How do you guys think about the abundance of like Bitcoin meta protocols and this kind of weird phenomenon where new assets emerge on Bitcoin L1 and then the different L2s or the different extensions to Bitcoin have to solve for like bringing those over? How is it different? Is the actual like transfer of assets from Bitcoin L1 to Arch, does that look any different, or do you have to like figure out how to prioritize the extension of those assets into Arch apps? I'm really curious because like we see almost even still today, like every few months, like some new thing pops up and has all of Asia trying to mint it and trying to speculate on it. How do you guys think about this?
So I think like one of the beauties about what Arch brings to the Bitcoin ecosystem with all these emerging meta protocols like BRC20 runes and beyond, like alkanes, for example, is that we are compatible with any UTXO assets. And conversely, these other meta protocols, they require an indexer. So you're not going to be taking a BRC20 into the alkanes wallet and doing DeFi there. So I think what Arch represents is this consolidation or this aggregation of all these multi-assets that aren't necessarily interoperable with one another, but they can be on Arch, simply because we process these UTXOs and manage them through our UTXO-aware VM. So you can technically do BRC20 to Rune swaps or Alkane to BRC20 swaps in some type of app that has enough liquidity to support those pairs.
You can definitely you can validate these like meta protocol rules as a smart contract on Arch. You can construct a Bitcoin transaction so that it so that it respects the meta protocol rules. You can even like swap between different protocols. It's mostly like respecting the rules and like coding them into the smart contracts and also like indexing.
So one of the last topics I have, which I think not a lot of other Bitcoin podcasts want to talk about, but this is Bitcoin Season 2, where we are not afraid to talk about tokens. Arch is going to launch a token maybe somewhere down the road. I know you've talked about it in other podcasts. How do you guys think about this? And how are you guys, do you have any information on how this might be structured?
So in the system design of Arch, the token plays two critical roles, right? You have gas fees, which ultimately are paid to the network. And there's inflationary emissions, there's a little bit of MEV revenue and priority fees, just like other proof of stake networks like Ethereum and Solana. So the token itself represents gas utility, but also it represents the economic security of the network. We're not just handing out keys to signers and saying, hey, please do right by us and participate in consensus, and please don't, act maliciously. Everyone puts up stake in the network, and that's the role that the Arch token plays. It's not staking Bitcoin, it's staking Arch token. So it does play two very critical roles, and we feel this is the necessary path forward to actually be able to scale programmability.
So where do we go from here? You guys raise, you go on the PR campaign. We keep rolling out new apps, products, Tinker, Arch, the whole Arch protocol and system under the hood. What does the next year look like for you guys?
So we just rounded up our first cohort of the Keystone Accelerator. What that is us identifying and cherry picking the best builders who are trying to deploy in the Arch ecosystem. And whether or not they needed to pivot into a new idea or they had their original idea, we provided them an opportunity to just go and run with it. We aligned with a great partner in VC, our fund called DPI, and they've been writing consistently checks into these companies that we essentially identify as competent and builders that we feel could execute well. So the whole points of the first cohort of the Keystone Accelerator was to align with the first primitives that are going to be seen in the first day of launch on the Arch mainnet. So Borrowland, AMMs, order books, launch pads, margin trading, and perps, as well as prediction market, as I mentioned before. So all of these applications will be ready to go, but they've also been getting some very concentrated support, not just by our team, but our investor network. So we just announced, as you said, the closing of our fundraising round, and a big part of that is going to be continuing to support the ecosystem. So we're launching our second cohort for that accelerator. We'll have 5 different $250,000 checks for teams that are building an ecosystem coming from our quasi ecosystem fund DPI holdings. And we'll be doing 2 in-person events in Dubai and Las Vegas to really rally around that core community of builders. We've got the guys from cohort 1 coming all in under one booth, so we can work on go-to-market strategy and collaboration and mindshare. We got the new builders that are still kind of dipping their toes into the opportunity, and so that they get to see firsthand what it looks like to be a part of our ecosystem. And we just want to vibe together and build a relationship, because this is going to be a multi-year thing for all of us. So we want to make sure that everyone is locked in and ready for the long haul. So that's going to be the next focus over the next few months. Of course, mainnet probably at the end of June, maybe July. Don't quote me on that, but right, yeah, that would be the most immediate milestone, I would say. And from there, eventually TGE and scaling the ecosystem beyond that.
Yeah, mainnet is definitely the most important thing we're focused on right now from a technical perspective. We're also focused on identifying these problems on mostly infrastructure that Bitcoin is lacking. We do think that infrastructure is probably one of the most consequential things for success. I mean, history is the history of infrastructure improvement. So we definitely are looking at what are some other pieces of infrastructure that we can build that could both improve UX for users and improve developer experience.
All right, guys. Well, I look forward to seeing you in person in Vegas at the Arch events, and maybe someday in one of your trips to Dubai. Cheers, congratulations, and I will catch you all later. Thanks for listening to Bitcoin Season 2. Follow Matt and Amine and Arch Network on Twitter and social media, and I will catch you all later.